Mike, let's have a good week. Stelios is here. Let's have a September to remember. Bran, how are you? Kman, Ryan, AJ, John Hawkins, Hugo, Bran, M2D, N1. Are you a robot? Are you a new invention? All right.
M2D2.
Oh yeah, that's right. No. Oh, and what is that? Is that from Star Wars or something? Anyway. All right. Parth, welcome. Welcome to Face. Okay. Let's go to work, everyone.
All right, we're streaming now. Thanks, guys.
Okay. All right, cool. We're streaming and dreaming. Okay, so
Don't start screaming.
don't quit your daydream.
And don't stop
It's,
believing.
yeah, I was gonna say, sing some Journey for us there, Dale.
Oh, it's a little out of my range, buddy.
I know it's if you were drinking and you're at a karaoke bar, I could probably get you to do it.
Not many guys can do Steve Perry, I'll tell you that.
No,
That's
no way.
pretty up there. So why don't we start off, guys, with the yen and the resignation, and we came in sharply higher, left a gap, filled the gap. This looks like a lot of other currency charts. Range, as Kman would say. Any feeling about this range, Kman?
Other than it's still, other than it is still there. Yeah, well, I understand. We were talking about it obviously on the flow show. I understand both moves. Because now we just somewhere need to wait. Who else is going to come into the frame? The dollar is one thing, the dollar yen. But I would still think that cross aside, the yen will find some rally sellers because uncertainty is never a good thing for investors. So perhaps if other dollars would continue to weaken, dollar yen may just hang around here, unless your US tens drop below 4% or so. But yeah, I think it's never a good thing. But he anticipated, it seems, the show a bit, thinking that he may be thrown out of the seat anyway on today's meeting, which as a result didn't have to take place anymore. So now they're planning early October to do a new leadership vote at the LDP. But if the candidates, who are most of them all already kind of known, step forward relatively quickly, maybe they can bring it slightly forward. But in the meantime, yeah, I mean, Japanese government is stuck. Does it mean that Bank of Japan can't do anything? I doubt that they will do anything this month, although they had some support from the data, wage data, growth data. But if you don't have a prime minister, maybe it's not a good thing that the Bank of Japan would be on the move. So everything seems a bit blocked and locked and stuck in Japan until we know who is going to be the new LDP leader.
Okay, your favorite, the Aussie, is leading the charge today,
Yeah.
making new highs for the recovery compared to the pound didn't do it yet, and the euro didn't do it yet, and Canada looks like a failing rally to me, and maybe we have something like this from here. We'll take you to the low 36s. So that's what I see in currencies.
Yeah, despite a pretty weak Canadian jobs report, that was quite weak to be honest.
Yeah.
But it looks like the weight of the dollar is a bit too much right now. Yeah, I'd say though that again the dollar is one thing. Maybe dollar CAD is just going to hover around in ranges. I'm not sure whether we can see 136.5 unless you start to really break euro dollar levels, 117.50, 80 cable 135.90 or so again. But yeah, it's I find it actually a bit surprising that Canada is doing even a bit better on the crosses side this morning. Just as an example, Euro Canada is 50 points lower, so 40
Yeah.
points lower.
I mean, it held up the best on the dollar slaughter
Hmm.
Friday. You know,
Yeah,
it came
rightfully
back.
so, I'd say, yeah.
Yeah, it came back like a champion. Ryan, you have any vibes in currencies this morning? Anything that looks important to you?
Yeah, I think the dollar's going to be mucho important this week after that NFP, and with the inflation data, we got PPI and CPI coming up. So yeah, I think we could be in for a bout of heavy rally selling should we see any rallies in the buck. And I think even if the inflation data is warm or hot, the market's not going to drop the bone about that jobs number. So I think any rallies we get are going to be hit this week.
Okay. Gold making new highs, silver not yet. Did silver make it? Maybe it did. No, I don't know. It's not as strong as gold.
Not yet.
We're getting near that 3680 level, which was a fib extension count. I think Blake had something up there too. We're not, I mean, we're diverging. It's still a pretty strong mow. It's over 70. And silver is diverging a little bit. I'm going to take a shot at 42 shorts, should we get there. Let's talk risk, because
There's a pretty big level there at 41.50.60, right where it stopped, a little way over where it
right
stopped.
here.
Also.
Yeah.
Quite important level there. Quite important.
Yeah, this looks like maybe a fourth wave triangle, and we get one more thrust out of this formation. You know what you could do is let it go above, and then next time back under this level, it would tell you that it was kind of a false breakout. Any view on S&Ps? They're certainly a beach ball. I'm trying them today, just like, you know, this big red candle, and I'm selling it. I didn't do the retrace. I'm already in there at 96. So I'm using this 9. It looks like this may just be, this was a strong candle. These are kind of, you know, bouncing off the trampoline a little bit, but can't get as high as it used to. I think Rug is saying one more high. That could happen, but I'm trying the retracement here today and see what we know the important levels. You know, before Friday, it was down here, but now the low that we had Friday is also at the first wedge line. Okay, so that 64.5 is going to be a sign that something's wrong. It's not that far away. It's, you know, 40 angles away. Why don't I throw it over to anything else, Ryan, you want to cover?
No, obviously we got several items coming up. We've got some UK GDP coming up on Friday as well. So the pound, we've got the ECB on Thursday. And you know, not much expecting in terms of rate moves from that, but they've got updated forecasts as well. So that could be a mover for the euro. Yeah, I've got a feeling we're building up for a bit of a breakup in this euro. Again, if it's on the back of US data, it's either going to go quickly, or even if other way, it's going to go slowly. So I think one way or another, I can see this heading much higher.
Kman, I've had a target of about 680 on
Exactly.
Aussie. You have something up there?
Yeah, absolutely. I've got something there as well. But we still need to overcome 66 for a starter.
Right.
Yeah, but yeah, I do have it up there too, Dale, if it could get there. It's a bit of an extension around 66.80. If you look at a much longer picture, if we get above 66 figure a quarter, 60, there's a retracement level from 2022 into 2025 around 67 and a quarter. But again, one step at the time, as we have seen with this currency already many times.
Yeah, well, this is going to be the 200 week is right there at 6680.
Yeah.
So we're above the weekly 50. So we'll see. I've seen these weekly moving averages reject and support. So we'll see what happens there. Oil, see what's happening in the energy patch. I don't know if this is real time or it's from the close. Oh, this could be, is this today or Friday? This was Friday, so nothing there nothing there on that. Nat gas is higher, and we're on the verge of taking out the 50-day. So we get to the 50-day, then you're talking about the downtrend and the 200-day, and this is a daily. So pretty good call from down here, but I think it's just starting. So trying to be disciplined about it and try and hold it. Blake, what's on your mind this morning, buddy?
Well, you guys are talking about the yen, and I know, Kman and Ryan have really discussed it probably to pieces already this morning, but it is consolidating between the 50 and the 200 DMA. And I know it's in a really, really tight trading range. And my assumption is that it's going to break out. It's going to break out sometime this week. And, following the CPI, I agree with Ryan. It's going to be a really important piece of data that we get this week. And so, I can see how the dollar yen is just kind of torn between these two levels. You can see the 50 DMAs in
Yeah.
green,
Yeah,
your 200 DMAs in red, and we're
Yeah.
just kind of stuck in this range and, just waiting for a breakout. And I think a breakout is looming. But obviously with the prime minister leaving and opening the door for, a couple, how many different, candidates are we going to see, do you guys think?
There's three at the moment who have got their name in the hat, but obviously others can pop up as well. The main two are the ones who ran up against him last time.
Potentially 5 or 6.
Potentially 5 or 6. Okay, so the I guess we're going to be making our decisions based on who's the front runner there. And the dollar yen's probably going to be more driven by the producer prices and CPI this week. Here, Dale, I can take over the charts if you want.
I
Yeah,
am here
but
too, guys, by the way.
who? What?
I know my voice sounds a bit weird. I've got a cold, but I'm here.
Oh, hey, Stelios, how you doing?
Not too great, but
But
surviving.
but you're here. So
I
you
am
you
here.
a couple months of partying and traveling
Yeah,
around
it hits
and
hard, doesn't it?
and it does. It looks like it's striking you down. Did you want to take the charts? You have some things you want to show us?
Yeah, I can do a couple of minutes if that's okay.
Yeah, here you go.
Right. So share. So excuse my voice.
So Knight's conviction on rates.
Yeah,
Um,
I was gonna talk about that. The thing I wanna say before I look at charts is one of my favorite things to see in markets, and when you have all the reasons for something to go one way and it doesn't, which means that it usually is going to go, the path of least resistance is the other way. So both for the dollar and the yields, we have all these stories about, oh my God, the deficits are huge and there's going to be more issuance. And in the US, they have to refinance, $100 bajillion in the next 2 months, et cetera, et cetera. And in the UK, you have, yields are high, but they're not. Obviously, they're dropping there as well now in the last few sessions. But there's all these factors that are there for yields to theoretically go higher. Inflation is also relatively sticky, and yet they're not. So when I see this chart here, remember we were in the middle of it, and I was saying I think we're going to test the lows of this trend line, and I think we're going to break and go below. And look, we touched it to the T. And so we are there now, and obviously the market is pricing now more from the Fed. I think we're pricing 2 cuts by the end of the year. I think we might get a 50 in September actually, but that's a different story. So what do I think about this, about yields? I think, yes, we may bounce here a little bit, maybe even try to get to 420 again, but I think the direction is lower. And the same thing happens with the Dixie. And, if you look at the Dixie, the yen, the pound, and the euro are well over 80% of the index. And we have Everything that's happening in Japan, in the UK, oh my God, politics are just crazy again. In the Eurozone, equally difficult, in France, and far right rising everywhere. So theoretically, all these three currencies should be underperforming against the dollar. Of course, the US has its own share of problems, but you're not seeing the Dixie doing anything. So what do I think is going to happen? I think we're going to 94.5, 95. And that remains my view. So if we do get these things, then what happens to risk? Because you mentioned risk, Dale, and I think that we are in a buy the dip mode in pretty much everything, even though it doesn't make sense. And sometimes it doesn't have to make sense if the path of least resistance is one way. And look at the S&P. I mean, is there anything bearish about this chart here? Absolutely not. And same with the DAX, and same with gold and silver and everything. The only thing that's worrying me a little bit is oil, because they announced more production hikes, and we are still lingering in this zone, which is very dangerous. So this is the one thing I wouldn't be long of at the moment. I would like to see a proper bounce, above 68 for me to say, yep, this is it. But for the S&P, I still think it's buy the dips. And yes, valuations are high in any metric, but I don't care. The price action is bullish. And gold, I mean, what can I say about gold? It's the same. Yes, can we have a pullback towards 3,500? Of course we can, but this is bullish, any way you look at it. Silver is the same. I'm still long my remainder of my longs. If people in the chat will know, about a month ago or 3 weeks ago, I took out some as we reached the high of this channel. We've broken out. Anything below 39.80 on a daily close, I get rid of everything, and then I reconsider, because that will definitely mean that we're back within the channel, and this is a false breakout, and that could do all sorts of things. And it's a similar story with platinum. I still have my longs there, but anything below, actually, I need to look at the level, but I'm watching that as a hawk as well, because if gold and silver correct, platinum is going to correct even more. So, and it's gone fantastically over the past few months, so I don't want to ruin that.
So this is what we talked about last time you showed platinum, that we could have a bounce, lower high, and then a C wave
Yes.
down for a buy.
Yes.
Probably, I don't know, 1,200 would be a good level. Yeah.
No, I think if we get below something like 1350, which is close for platinum, I think I'm gonna let that go, because I've been long from way below, and
Yeah.
it's never bad to take profits and scale in and scale out. That's what I always do. And even cryptos, I'm not a fan of cryptos, but they are still also relatively correlated with risk. And if risk goes up, I think cryptos go up. What percentage they go up, I have no clue, but I think they go up. And in the euro, it's consolidating sideways. I don't see, even with all the problems in the Eurozone and France and everything, why isn't the euro lower? It should have been. So if it's not lower, I think it's going higher. And a similar story with the pound as well. I mean, the pound, we had a false breakout there. We're going to be probably retesting that. And, the situation in the UK is terrible, but it's not going down. So, do I think this is bearish? Absolutely not. And you have Norway, which I really like. And I said, when we broke below this big channel, and then we retested and then went back down, I said, look, I think I'm still bearish dollar Norway. Absolutely no way can I be bullish this. And dollar MEX is at a very important range again, this support zone, but not a bad risk reward long, but I think the chances are that this will break down. So we're at key levels in so many things.
What's the chart look like on chicken soup?
Did you just say chicken seed?
Soup.
I need to get some
chicken soup. Yeah, you need some.
Yeah, I would.
Some.
I would do the monthly chart on chicken soup right now, buddy. Yeah,
All right.
I hope you feel better.
Yeah, Stelios, feel better. You were talking about the bond market and in the chat room. That was kind of my point. When we talked about this last week. Remember, Dale, when
you warned everyone after Monday not to get too bearish because of where we were.
Yeah, just because we were on support. But the problem is now, and this is what Stelios was saying, and I agree, is when bonds start going up and everybody's so bearish bonds and short bonds, when it starts going up, you're like, this is ripe for a squeeze now. I mean, that's obviously yields would come down as a result of that, but the bond market looks like it could squeeze a little, doesn't it, Still?
Oh, absolutely. Yeah, I think the markets, from what I was reading, is quite short. Fast money
Yeah.
is quite short. So, yep, absolutely.
Yeah.
TLT, if you put TLT up there, Blake, it looks like it measures
Uh, uh,
93
I don't
or
see a screen
so.
actually. Is Blake sharing a screen?
Yeah.
Should be.
Oh,
Yeah.
okay.
Yeah, there's your
Yeah,
TLT.
yeah, there we go. Sorry,
Okay,
sorry, my
so
bad.
that range from 3.5 to 8.5, and we're trying to break out. I just had, it looks like an ascending triangle. You have your lines at the bottom for the uptrend. Too small. No, there, yeah, like you had it for bonds. Yeah.
Like this.
And then just a flat top there. And that's a 5 handle formation would take you to 93.5. And I think that's what Jim has been talking about, 92, 93.5 for ending wave 4 for quite some time.
Yeah, yeah, he does think we could get a little bit of a squeeze here.
Yeah,
And I mean it looks like it. I mean,
yeah.
especially with yields coming down, it looks pretty doable. So yeah, anyway, I think we should be keeping an eye on the bond market for sure. Let me ask you, Dale, since we're chit-chatting, the S&P is trying to make this, we have this like ascending wedge. We tried to break lower last week. We're still in the wedge. How do you feel about the S&Ps at current levels?
Very, very vulnerable. I mean, Nvidia's holding. Nvidia looks worse. It's a rising wedge. Maybe you could attempt one more high, but all of these highs are being met with lower and lower momentum readings. To me, unless you're going to have some kind of throwover to the upside, I think it's vulnerable back towards the two wedges that we had last week. So, first one I think is about 62 or so, 6140 prior contract highs. But then the 200-day may come into play as well on that.
Yeah,
That's
I'm
lower.
I'm I'm with you. I'm in the same camp with the S&P. And if you look at the equal weighted S&P, we're really struggling up here at resistance, and I think it's worth noting where we currently reside. I know Stelios and also Kman mentioned silver, and I typically I mean I've been sitting here just watching you guys, just crush silver to the upside. There is some pretty key resistance. K-Man mentioned there's a bit of a level. I do agree this bit of a level happens to be the long-term 78% retracement and 161% extension of the last major, well, I say major, last correction that we saw a month ago in silver, and everything's very divergent. And so Dale, when you said that you would consider shorts up here at 42, I agree with you because that 78% retracement is right there. I think it's pretty key. I don't know if you look at long-term silver, and this is who are the brothers back here in
Hunt,
the
Hunt.
Hunt brothers, right? Yeah. So this is a
Yeah.
really big. You can see how big these levels are. I mean,
It's
when you
amazing when you could see your whole life on a chart.
isn't it crazy? That is
Yeah, I'm
crazy.
like I thought you'd bring up the Hunt brothers in my memory. I just had a flashback.
Well,
All
it's
right.
definitely worth noting. I mean, these are big levels that we're approaching, and I would venture to guess that we're heading up there again. Not necessarily today, but I mean, based on what we're seeing here, it does seem very logical that we would at least get back to the high 40s at some point. Like I said, I don't know if it's today or maybe 6 months from now, but it does seem that's logical that we revisit those areas, especially with how strong gold is. But gold's up here, and I know a lot of people see where we're at in gold. We're at the 127% extension, little overshoot of that, and I think this 3730 level, the 161% extension would give us that minimum wedge extension is the 161% extension. So if if I was long gold and looking for targets, I'd be looking there first. One of the other things I wanted to talk about really quick is I know these commodity currencies have been somewhat strong, but let's not forget that the Aussie dollar and the Kiwi too, to a certain extent, the Aussie's at a resistance trend line, weekly trend line from 2013, excuse me. So really key levels of resistance that we're up here, and you got to give or take, 50 pips or so around these levels. Around the 66 level is really quite huge in my opinion, and which is something that we should be noting, because if we are going into a pretty key week for the market, especially for the dollar, if the dollar does weaken following CPI and PPI this week, we have producer prices first, then CPI, which I always thought it was the other way around. I don't know why. I always thought it was CPI, then producer prices, but anyway, that doesn't really matter. We've got both pieces of data this week. If the dollar starts to really weaken, I mean, this is a big level. I know, Kman, you've been focusing on the Aussie dollar to the upside, but man, if this thing breaks, if we start getting above 66.30, that's going to be pretty bullish. I am a little worried that risk appetite is where it's at. Stocks are at historic levels and the Aussie hasn't had much upside, so that's always a big concern for me. But also the flip side is you can't ignore the fact that we're at resistance. So let me ask Ryan really quick before we wrap things up and we turn it back over to Dale for his interview with Adam Button. What are you looking at today to trade? What's on your radar for the day?
Bit of management. I've got my Aussie Kiwi shorts, and that's testing the 110, the 111, 110.90.
That's a big one, baby.
Yeah, it's reasonably big. Yeah, if it gets under there, then we could be heading down. I can't see this falling out of bed though, because it's been in a very, very bullish uptrend for a while. So yeah, but if it gets down to 110, 110.20, I'll be looking off some of my shorts.
I think that's wise. Kman, what are you looking at today?
What am I looking at? Well, I'm still long
Well,
gold.
I know you're looking at everything, but what are you
Yeah,
trading?
I'm still long gold. I'm only small long on the Aussie. I'm really waiting for the break to push the buttons. But Kiwi is also starting to look very interesting, because if we can get above that 59, 50, 60 for a starter, but then especially above 60, it could go really for a walk. Yeah, that's about it, mate. And I'm going to buy like perhaps a bit of crosses yen. Maybe not stay away from the dollar right now, but crosses yen maybe.
I mean, look at this. You speak about the Kiwi. Look at the Kiwi yen. What a
I
breakaway.
think it may, and you know what, the Kiwi is a smaller market. So if that starts to turn now, it may have a lot more to catch up to do. Bringing
Yeah.
out the Kiwi back to 110, for instance. You're talking about a percent move in the Kiwi higher.
Yeah, and sterling yen's not too. Hey, wait, Ryan, what the hell's going on with sterling this morning? I mean, the thing is like very well bid. Euro sterling's back in the middle of the range, in the triangle here. But what goosed the sterling today? Anything in particular?
No, probably that no shit hit the fan today. So
Okay, no
if
bad
it's
no,
not
no
going
bad
wrong,
news is good
it's going
news.
up. Yeah. If it's not going wrong, it's going up.
Got it. All right. Okay. Fair enough. All right, guys. Well, this is going to be a very busy week. I know today on the calendars, kind of light. We didn't expect anything exciting this week, or today. We do have Empire State Well, no, that's next week. I'm sorry. Today there's like really nothing from here on out. Tomorrow, kind of a slow day. It's Wednesday. It really picks up with, see, producer prices on Wednesday. Usually it's flipped around. I don't know why that is. CPI on Thursday. We have the ECB also on Thursday, and I did miss that in the week ahead video. And we have UK GDP Friday morning, and then it's all about inflation. Do you have any thoughts about the ECB before we turn it over to Dale here? Ryan, do you have any thoughts on the ECB?
Nothing more than what I've said today or earlier, that it's going to be probably the forecast that matter most for the euro, rather than them do nothing on rates at the actual decision. And as Kay mentioned, watch the colour chart, because Lagarde's back from her holidays. We'll see how brown she is, how tan she is.
All right. Well, I mean, and I'm still hoping the euro makes, one final move to the 120 level, or close to 120, and maybe we might get that today or this week, with a more hawkish ECB, and maybe a little bit more benign inflation data. Maybe that's what gets us there.
If we get that, if we get soft PPI and soft CPI, I think we're heading to 120 pretty quickly. We should hit 119 fairly quickly either way. But even if we don't, I think it's going to grind up there anyway.
Okay. All right. Fair enough. Well, Dale, I know you have Mr. Adam Button from Investing Live that's here, and so I'm going to pass you over the.
Can you promote him, please?
Absolutely, I'd be more than happy to. And anything else for the rest of you guys? All right. Well, we're going to bring over Adam. Coach, have a great interview with Mr. Button, and you guys make sure you all stick around for Adam here. Ryan, Kman, thank you guys for getting us all up to date on the Flow Show today. I thank you, because it's always great to get up to speed with you guys first thing in the morning for me.
Cheers, Chief.
All right.
I'm back home. I miss the ocean. I'm kidding. I'm all right.
You do miss. Are you back? You back back in
Saturday,
California? Oh
yeah. The weather is so beautiful here.
Humidity is high. All right, buddy.
Anyway, it's good to it's good to be home. Sleeping in your own bed, you can't beat it, right? So, all right, team, thank you. All you guys that were here, Kman, Ryan, Blake.
Thank you, Coach.
All right, good, nice job. And I'm really looking forward to talking to Adam. It's been a while. So, Adam, hey,
got me here. Dale, have I been promoted?
You've been promoted?
You're in, Adam.
Yeah,
good to see you, buddy.
You're now you know what your promotion is? You're you're a senior broker.
See, okay.
Remember those titles? You're not a junior broker.
Well, you're not.
You're experienced. You're a senior.
You're not a cashier at Walmart. You're an associate.
I did that this summer. I was a greeter. Hey, hi, welcome to Walmart. Yeah, use your credit card. So, buddy, let me ask you, top of mind. We're in September now. No excuses anymore about, everyone's on vacation and there's not much going on. Do you think that we're going to have a wild September, or it's just going to be, the way the first week was?
I mean, the Fed decision is about to get a lot more interesting, right? The soft jobs report. Now we're flirting with 50. We were writing about Credit Suisse or Credit Agricole this morning. I'm not sure who it was. Changed from 50. Changed to 50 from 25. The risk here is you get some disappointment if the Fed doesn't go 50 now. I'm interested today. We have Goolsbee speaking at 1:45. Bit of a hawk right now. It hasn't been talking about cutting. I mean, he's kind of a dove in general, but he's not too eager to cut right now. And so if he comes out and says, maybe we need to hit it a little harder, that could be the start. I'd like to hear from some of the core Fed members about what they're thinking. And, if they're not going to do 50, I'd expect them to push back on that pretty hard.
Okay.
Really aggressively. So that could that's this week's kind of playbook. I think that's it. And then in the bigger picture, I'm just thinking about the big picture.
Okay. Well, maybe if he disappoints, it'll even be more bullish, the long end duration, because this to me was the comeback of the week, right? We started with the gilts and the problems over the cabinet reshuffle in the UK, and it went across the globe. Germany, Japan, yields were spiking, we gapped down. And where we were by the end of the week was just an amazing turnaround. And we're right at a major resistance point where we could have a breakout here that could take us up to 93. Can you see a narrative that would take us there? Maybe the disappoint, which means, they're not just going to debase
Well,
and
I mean,
flood.
a terrible economy is what gets you there, right? And
Right.
lots of job losses. And I think the market's coming around to that thinking. I mean, we're stuck on tariffs and all these changes, and you could, I guess, the bond market's starting to come to the conclusion that if you just have a lot of excess unemployment, like excess workers, you're not going to have an inflation problem in a service-driven economy.
Yeah.
And
Yeah.
I don't know if I'm fully on board with that, because the tariff playbook is so tough. I think all we've learned so far is it takes a while for some tariff inflation to kick in. And, it's really hard to look through all that. But yeah, you can see it was UK yields highest since 98, I think,
Yeah.
last Tuesday morning. It was a bit of a
Yeah.
panic, and then big turn through the week, capped it off with soft non-farm payrolls. But all week, right? Beige Book was an interesting one. Anecdotal report saying pretty much flat growth across the country. Not a lot of optimism in that one. Jolt's a little worse. I mean, the ISM services was okay, but not so much to hang your hat on last week. And the
It's the
risk
best.
is you get the high CPI, right?
It's the best blue weekly candle you could look back for months. Maybe the last blue candle, big
I
candle, was
mean,
like
you're
this.
talking like 470, right? In 20s right now. I mean, if you
Yeah.
look at it on the yield perspective, 470 is
Yeah.
not bad.
Yeah.
It's not like investing in gold for a week when you get 470 every week, seems like
Yeah.
lately.
Yeah.
And I think, that, people ask me, oh yeah, what do you do? US is, a mess. And we said Japan's a mess this week. UK, I know Canada's not looking great on a lot of fronts. There's no safe haven currency anymore. That's what I'm telling people. Like
Okay.
there's no currency that's a safe haven. I think that kind of idea is due for really a rethink. I mean, yeah, you're going to get risk off days and flight to safety and the old knee jerks, but if you're looking for somewhere to camp, it's precious metals, and that's it.
What could upend this
What was
for a
that?
correction? What could upend this type of thinking? I know it's pretty ingrained. Central banks have been doing it for a while, but it's not like gold's been rallying because of risk off.
Well, that's it. It's kind of
Okay.
come through a few environments, right?
It's been a risk on trade, hasn't it?
But it held up. It held up on some rough days too. Tuesday, we kind of had that poor open and the bond market kicking, screaming. Gold did well then.
But I
So
mean, look, here's a weekly in gold, pretty
I,
much up from 24. And then here's a weekly in NASDAQ, pretty much up, same time. It's all one market. Every once in a while they diverge from each other, but it's not like gold is going up because everything's falling apart.
yeah,
And
maybe.
that's why most people bought it, because they thought there was going to be problems in financial assets. And instead, they've run up together. So if we ever have a correction in risk, won't gold be part of that too?
I think gold's okay if things are bad, but it gets problems when things are really bad. So, if you can have an orderly, it takes 10% sort of correction, gold's fine. If you
Yeah.
get things falling, like the start of COVID, a crash, then everything gets liquidated. And I think thinking about the bigger picture, I was off for a little bit this summer, and you look at the kind of macro of markets, and it's just investing is such a fad right now, or trading options, leverage. Leverage
Yeah.
has never been more available. The amount
And
of money
we're also at margin records right now.
well,
Margin.
everything's just flowing in, right? Like the valuations don't matter in tech. The money keeps piling in. The options are amplifying everything. It's a crazy setup right now for everything. It obviously ends badly, but the party really is going. And
What could stop the party? My guess is a reversal in the dollar, which doesn't look like it's going to happen until we make one more low. But in this, eliticians would call it ending diagonals. Do you think that's really going to be the key? Really, dollar's been going down. Dollar goes down, everything goes up, Adam.
I mean, I
So-
think something has to happen in the psychology of the market. You know, something big has to change. Whether it's Congress, you know, getting really austere, or the bond market blowing up. You know, if the bond market blows up somewhere, it could happen anywhere, right? And I don't know if it's going to be the UK or Japan or the US or you know, it's hard to say, but it's so intertwined. So I would worry about the fiscal side more than anything, but that it could come from austerity. You know, it could be war, it could be like AI right now. Like for my baseline, as this goes on for another couple years, the AI trade is, I think, made everyone willing to ignore any kind of valuation and believe that the profits are going to be there. You know, right now you have like Duolingo. Have you seen like they're trying to meme Duolingo into existence? And it's like this is such an obvious loser from AI, but people want to believe it. I see what you're saying about Nvidia. That is a little bit of a troublesome looking chart there. And I think I'm talking big picture here. If I'm looking at September, seasonals are weak. You know, the Fed's probably going to disappoint. There's a little bit to worry about here, but if we're down,
but it'll be a buying. It'll be a buying opportunity.
I think you're in the buy the 5-6% dips.
Yeah.
You know, where you can get it, and not necessarily in Nvidia, but in the Nasdaq.
Yeah,
and,
Nvidia
you know,
could trade 140.
Keeps flowing in, and then I think you have sort of upside now on the tariff decision. You know, to my sense, like the Trump admin might lose on this,
and that would be bullish.
It's disinflationary. So now the Fed has more reason to cut. I mean, maybe they try to slap them back on, but they got to refund all that money. So, right, you have this money just getting stuffed back into the market. Oh, it's not really going to trickle down to consumers, but it's great for shareholders. For like, I don't know, Nike or whoever's paying the most tariffs. It's probably worth looking into.
Yeah, that would be interesting. Because I asked someone about it when it came to copper. And, you know, they kind of took that market away from us with the tariff stuff. You know, we have, you know, this, and now we have like, you know, it's in shock. You know, they cleaned out all the bears and the bulls, and now it's kind of like an EKG of someone in a coma. I mean, it doesn't look good to me. I don't know. I know you've always loved copper. What's happened with tariffs?
Well, there's
change anything?
U.S. copper and, you know, global copper, right? There was this U.S. premium built in on the expectation of tariffs. So you have like the kind of global market's pretty good for copper still.
Yeah.
Like you see, have these hard assets that still look good. I think governments in the West are increasingly turning into China, and they're taking that infrastructure spend and stimulus, right? In the US, it's manifesting in these huge subsidies to AI and chip plants and power. Canada, we're, you know, talking about building rail. You know, I think this kind of hard asset investment probably bodes well. You'd like to see more from the private sector, but it is going to happen in power demand. I mean, have you seen power prices are creeping up? And I think copper's on the other side of that. And so I couldn't be more bullish. Or gold.
This.
Yeah, exactly.
Nat gas turning.
Energy is a problem. Energy is a problem. But gold, like, I think, why are we overthinking all this? Gold, it broke out, it consolidated, it broke out, it goes up every day. You don't have currency risk. I mean, look how it doesn't get any better than that chart right there. It's right out of the textbook. You know, the fundamentals are all there. I still don't feel it's a crowded trade. The miners are cheap.
You don't think it's crowded? Yeah, find me a bear.
Well, that's fair enough, but I just don't think Main Street's there.
I don't know if I ever say anything negative about gold. I get a lot of pushback from people, you know, like if you know, the Bitcoin crowd, if you're bearish, same type of thing. So I don't know, DSI's been near 90 in the gold and silver. So it certainly is not a contrarian trade.
Yeah, well, I agree with that. But you know, it's like we've been bullish since 2000, and it's been the same thing all the way along. Governments can't balance a budget. Central banks don't know what they're doing. And now the world's just getting more unstable.
Yeah.
And it's just like, I don't know. Why
I
should it
mean,
stop working?
well, someone said, what if there's peace between Russia and Ukraine? I really don't see that happening. But how about this? Russia, new sanctions coming on. What if a central bank sells some gold? Would that trigger it? A
Yeah,
correction?
sure. I mean, like, who's selling though? I just don't like why.
Well, Russia's ruble's cracked.
I
So I
mean,
mean, when
but the central banks are always kind of on the wrong side of it. I mean, everybody puked out their gold at like $500.
I remember,
Um,
yeah.
and then I think of the geopolitics. Look like JD Vance, bragging about blowing up drug dealers, right? Using the military to blow up boats, and then you have Russia, right? And then the Middle East. Like, I think, just if you think of the war side or the peace side, I feel like the rules of engagement have just changed in the last couple years. Like this sort of facade about the global order and war crimes. Like it just seems it doesn't matter anymore. And I feel that is probably the bigger trend within the trend, is that we're just going to see the mightiest countries do whatever the hell they want.
Okay, well, that can't be great for financial stability.
Yeah, great for
Eventually,
gold.
right? Yeah, great for gold. Dollar, do you foresee any kind of bottom
I
coming
just
in the dollar?
I can't get behind this idea that inflation is contained. Um, there's just too much. It's coming in the pipeline. And unless the tariffs get taken away, I think that is, to me, the next quarter. If I talk to you every 3 months, and
Yeah.
if I could ask a genie one question, and skip ahead to say December, it's what happens to the tariffs. And then I don't know if maybe Congress will reauthorize them. I know it's some pretty slim margins there. I don't think they will. That's my base case. So I think it really hinges on that. If you lose the tariffs, it's a big dollar problem, because you have a fiscal problem, and you're going to get some rate cuts. But then again, he has pretty good global growth trade. So yeah, I think you just leave dollars on that. You buy emerging markets, commodity currencies,
Okay.
because it makes the world a lot more simple. And I think risk assets just go bananas. And
Okay.
that would be a
Yeah.
pretty strong signal.
I mean, are you in the camp that before we have this bull market end in S&Ps, they'll have a 7,000, 7,500, 8,000 handle?
I think 2 years, like, this party goes for 2. It obviously ends badly. You can see all these things, like the global order falling apart. Like globalization has been so good for stocks.
Well, why will it last for 2 more years? Why not just
It's
one?
just such a frenzy that I just think
Okay.
the money just keeps, it just gets tested and it's bulletproof. And I think the Fed has a huge put, right? We're four and 4.25 about right now. I mean, you
Yeah.
can cut 200 basis points. That it's hard to sell off stocks when you know the Fed's got your back. You know what I mean? If we were to see a
Yeah.
5% drop in the next week, Fed's cutting 50. And if it gets
Okay.
worse, they'll cut another 50 next month. And so that's there. I mean, a lot of it's priced in. You start to worry, okay, we're priced out on the curve, 150 basis points from here through next year. How much more is there in the tank? You maybe have 100 more basis points there. Once you get to the bottom and the Fed can't do more. I don't think we'd price in like more QE, or probably price in more fiscal stimulus, though, at the risk of inflation again. But I just like that setup for a couple years. And I just think the AI trade has room to run. Things are still happening. I'm there too, trying to poke holes in it, saying this doesn't work. But like, the things are working, and it's obviously bad for Main Street, great for Wall Street. You're going to have huge layoffs, and
Yeah, I
that's
know.
just the idea of it, right? It's great for now, and then you replace, I don't know, a portion of the jobs, and then there's no money to spend on things anymore.
Yeah, they're saying right now, kids coming out of college, entry level, cannot get hired.
Yeah, they're getting
So that
smoked.
they can't get into the door.
And the only like if I think about last week, all this data, right? The only thing that stands out to me is the McDonald's CEO just telling it like it is. He said low end's hurting, middle's
Yeah.
hurting, the top end's doing great. And I
Yeah.
just look for investment themes around that. Like I'm looking at aviation, flying. I think it's pretty good. I mean, you have airlines trading like 4 times earnings.
Okay.
They're
Interesting.
cyclical. It's a tough industry, but there's no AI disruption. Like that game, the planes that we're flying on today, we'll be flying on in 40 years. And
Okay.
that's
Yeah.
sort of a
Could
place
I?
I'm thinking a lot about.
How about agriculture, Adam? I mean, I've been looking, fertilizer stocks because um, I think that grains, which have been the weakness for a long time, have turned. Here's the corn. So big long-term base, nice initial rally. Of course, we could get a pullback, but the grains and natural gas is needed to make fertilizer. That could be everyone's buying that gas, so it's kind of like the bridge, but for the AI centers, data centers, before we have uranium to supply electricity. So here's corn, and from where it was at the invasion of Ukraine, eight. I mean, even bear market rallies. Look at this space here. Here's wheat. Look at the space here. Beans. Look at the space here. So I think, and plus, I think Ukraine, big breadbasket, right? They have drought threats in Ukraine. And if there isn't peace and things intensify, and I don't know what you think, but to me, it seems like some of these European nations want to take on Russia now. They don't want peace. Um, so if that continues to fester, we may not be able to get grain out of Ukraine. So anyway, I think these were they're the most out of favor commodities because they've gone down and infinitum. And as far as your inflation argument, these grains are pretty good, pretty big input to everything else that we buy at the grocery store. So, if we're about to come out of this bear market and we get a good recovery or even get back to where we were, look at where we were,
Well,
$15 beans.
I like what you're showing on
What do
the
you
chart
think?
there. I don't know the grains that well, and
Okay.
I don't know. I don't predict the weather,
Well,
but
build a silo and learn.
that on a risk reward, those charts do look kind of compelling. If you think it's you don't have a ton of risk at the bottom end there, especially that wheat
Yeah.
one. Yeah,
Yeah.
I mean
Look at
you
wheat.
got
Look,
a
it
bit of a
was
base there
it
if you want
was
to control risk.
Yeah, it was almost $14.
And then I think though you think, well, if that's the case on Russia, I mean, oil's kind of compelling too. If you talk about pretty hated,
Yeah,
did pretty well today on that OPEC boost. It wasn't, middle of last week that wasn't on the radar. Friday the murmurs started. Um, Pretty
and the
strong today.
whole world's bearish
Well, I
on
don't know.
that
They
beef.
keep adding barrels. Like I don't know how these barrels are getting absorbed. I mean, a lot of the ideas that OPEC it hasn't been delivering what they promised. But that summer can kind of mask things sometimes. And then you're going to get to like Christmas time and nobody's wanting these barrels. And that could be a real problem for oil. But if you get $40 oil, I mean, I think it's great for a little while, but it's totally unsustainable.
Okay.
And I think that's kind of like the dream trades you look for. You look like a hard asset, totally blown out. I mean, the investment just stops in the 40s,
Well,
probably in the 50s, to be honest.
you're a good technician, so this was a technical argument for nat gas. Okay, so
Oh, you're missing out here.
that's the S&P, but uh, it was based upon what happened last year. Okay, so last year was a low, right? And we had this nice move, about $3.50 to 5. And since last March, which about 4 or 5 months of consolidation, and looks like we're putting in a higher low, and we could come out of here now. So this could be a 3 or C to the upside. Could be a money wave.
I mean,
Anyway, that's,
there's a lot of LNG demand coming. Like the builds are coming and coming
Yeah.
and coming. I mean, the economics of taking $3 gas from the US or $1 gas from Canada and selling it on the world market for $13 to $20, it's unimpeachable that
Yeah.
those kind of economics. You just got to time the build out of the LNG.
How
And
about Europe? Adam, is Europe still dependent upon
you know,
Russian natural gas?
well, I mean, they seem to be all right. I mean, that was the trade 2 years ago. The costs are pretty brutal. I mean, Europe is pretty incredible to me right now that the ECB's been, I think, just telling it like it is, saying, hey, this has been better than we thought. We're
Yeah,
coming through tariffs okay. Growth looks okay. We kind of cut at seemingly an okay time. Still have a little bit of fuel. And you were talking with the other guys beforehand, 120. I mean, it's kind of beckoning the euro, a little bit of
yeah.
momentum. Italian stocks, I think, best in the world this year. Italy, I mean,
Wow.
unemployment rate there is at the lowest since the 90s in Italy,
Yeah. Huh.
like so something is going right in Europe, but truly the most hated place and well deserved. But
Yeah.
not Italy, not like Europe in general, but I love Europe, but not the stock market or the
Yeah.
economy. But something is happening right now, in a few places at least. It's hard to get excited about Germany. They're just
Yeah.
going to get smoked by Chinese manufacturing, it looks like, and the auto game. But I guess that's all priced in, and
Yeah.
it's doing okay.
Stimulus for defense. They're spending. That's
Yeah.
why people are bullish, right?
It's like the Europe gets its act together trade. I mean, everybody has always wanted to buy that. It just doesn't seem like they've actually got their act together, but something's working.
Have you guys rebranded Forex Live into
We
Investing Live?
are investing live now, and that's we've kind of always been, right, Dale? Like we talk
Yeah,
about everything when I come on.
we do.
So it's a macro focused site on investing in really everything. It all moves together, like you said earlier.
Yeah, it's a big
And
jigsaw puzzle.
I don't want to, if I want to buy Italian stocks instead of the euro, I mean, a lot of it's the same trade anyway. And you want to find where the torque is, or, gold miners instead of gold, or
Yeah,
sectors within the SPOOs, or everything else. And it just feels like the leash is off a little bit to talk more about the sort of broader investing landscape and drill down even into individual names, which we think we can add a little bit of value that way, or at least something thoughtful, and then tie it back to the macro, which is what I do, and try to make magic happen once in a while.
yeah. Larger the universe, the more opportunity.
Yeah, and I think you see that, like I mean, for retail, listen, a lot of institutional people love Forex Live, but you can't pay the bills the way our site is with that. And retail needs, like, there are pockets, even smaller cap places, undervalued things that, a $500 million stock, like there is just huge opportunity in that. And I think the world has been in this place where, CNBC's on, and you can't talk about these small opportunities. And we want to address that because there are huge opportunities out there.
Are you
In
talking like micro caps?
I mean, I don't call that a micro cap, but we're not thinking, a $10 million company or anything here, but
Okay.
sort of it just drilling into the full investing universe, and not necessarily, like, I'm not trying to pump a meme stock, but letting people know that there are lots of things for retail to invest in, that's
Yeah.
not Nvidia. I mean, it will turn at some point, and there's
Yeah.
having a broad knowledge of everything, it pays, as you know.
Yeah.
And so we're just we're ready for that, and I want to be that guy that'll tell you that, hey, like, here's where you can camp out for a safe 7%. And
Well, you could be my camp instructor anytime, Adam. You
Well,
can be
camp
you're
counselor with
yeah,
sing-alongs. We'll do it to
yeah.
song.
Cool. Well, I
You
can't
play
wait to
guitar,
do.
don't you, Dale?
Yeah, I can't wait to do
You do the
Kumbaya with you,
guitar. I'll do
man.
the singing. We'll
Well,
light the
the camp.
fire.
We'll have s'mores, shots of tequila, everything.
We'll make
What
songs
the
about
heck?
silver and
Yeah, we
airline
will.
stocks and.
Anyway, it's interesting to get your take on everything again, Adam. It seems like it's been ages, and I'm always glad to talk to you and have you share what your focus and beamed in on. And I hope this expansion is bonanza for you guys.
That's very gracious of you, Dale. Thank you very much.
And I know it's going to be good for the trading public. And I hope it's good for you too.
Well, that's what we do.
And
We put it out there. It's always been free, it's just
yeah,
stream of conscious on what's happening in the market minute by minute. And we've been doing it 18 years now, and people like it, and I like doing it. So we're gonna keep on doing it and try to do it better than ever. Try to get better every day than the last, and solve the puzzle one sort of data point or talking point or market move at a time.
highest conviction idea for the next few months.
That's just gold. I mean, just do what's working.
All right, okay.
I just I don't need to overthink it right now. And
All right.
get it to 3,800. Is that enough? I mean, it's not, I don't think you're not retiring on 3,800, but
Yeah.
it should get, the
Uh,
seasons are a little weak in September, but November, December, January seasonals and gold are great.
Okay. So you have an upside target on
I mean, it's
5K?
4,000, right? It's close
Yeah.
to 4,000. I mean, topped out right at 3,500 in April. I think it
Yeah.
likes the big round numbers like Bitcoin
Yeah.
or whatever else.
So
So,
that would
and
be
I don't
30.
know. I think that's the easiest technical trade. The fundamentals are all there. We'll watch what
Well,
the Fed does, but I'm curious to see what happens with Cook. This sort of these are the game changers, right?
yeah.
If Trump can stack the Fed and dictate lower rates, I
Then
mean,
then the US becomes Turkey.
exactly. And what's the upside on gold in that? Like, it's
Yeah.
crazy. Stephen
Yeah.
Mirren standing there last week, the Fed governor nominee, saying nobody asked him to lower rates and he's going to be fully independent. Give
Yeah.
me a break.
Yeah.
Like,
There's not a lot of truth out there nowadays, is there?
it's
Huh? I
wow. People
know.
say
I know.
anything.
Anyway, you know the truth is in price because that's what people worship. That's their money. And if they're putting money on it, that's the truth for at least that minute. And I want to keep an eye out for 3,700, bro, and see if there's any kind of reaction
Yeah,
from
we'll
there.
see. I mean, that's not the contrarian trade. Like, you make
Yeah,
an argument that something like lumber or grains, like you're talking about. I mean, there's some
yeah.
not great stuff
I
on the other side of the contrarian
yeah,
trade
I
too, and you
I
can
think there
barbell it.
yeah, or there could be some rotation. Metals have gotten expensive. Grains are cheap, just like the rotation of different sectors in the market. The same can happen in commodities. I've seen it. Anyway, great talking to you, buddy. Family okay? Everyone doing okay?
Doing great. Actually, Dale bought a house on Friday, I think so.
Oh, wow.
And so they'll have me put the dress
Yeah,
up in the
well,
office there for you. So should be all
okay.
right.
Well, are things for sale? It's a buyer's market still?
It is a buyer's market. It's nice to be buying in a buyer's market rather than what it was in 2022 when people were
Yeah,
going nuts there. So yeah, it's
yeah.
getting bad in Canada. It really is. It's tough
How
to
much how much
jump
off
in.
the peak are we? How much off the peak
Oh,
are
we're
we
like
doing?
where I'm in the near Toronto, really east 25, 20, 20. I mean, it's going to get a lot worse before it gets better, I think here.
Yeah,
So
it's interesting.
it's a Canada's in a pretty tough spot here right now.
Yeah.
Um,
All right. Well, then there's
there's-
got to be a great place to buy the Canadian USD CAD
oh yeah.
eventually, don't you think? 136-ish, something like that.
Yeah, I think I mean, it's tough on the dollar side too. Like, there's nowhere to camp. So
Yeah.
you try to just find things that are going to work in any environment, or you just close your eyes and buy Nvidia. I mean, we had 3 chances to buy it at 90, Dale.
I
Kept going
know.
back to 90.
Yeah.
Said after the first time, if it gets back there, I'll buy it again. Didn't.
Yeah. Well, next time if it gets down to 90, you won't want it.
Exactly. Well, it's just, isn't that the way it always is? So I don't know.
Anyway,
You
yeah.
gotta find something that works for your, how you trade and how you think and everything else.
Yeah. Well,
You
Adam,
don't got to catch them all. You just got to catch them once in a while.
I enjoy the way your mind works in the market. Thanks for edifying our community today, buddy.
Very much.
And you can follow Adam on X at FX_button and go to investinglive.com for some great content. I believe that Adam's one of the better minds out here in FinTwit. So keep him on your radar.
Well,
Thank you,
God bless
bro.
you, Dale. Appreciate that. Have a wonderful week.
All right. Thank you, brother. I'll get a hold of you. We'll talk in the fall.
You got it.
All right. Adam
Thanks,
Button,
everyone.
everyone. Follow him on X at FX_button and check out their site, see what they're talking about now. And that's a wrap for me. Join the team in 9 minutes on the Morning Edge. Remember, don't just count your pips, count your blessings. Adios. See you for Turnaround Tuesday. Thanks, Adam.
Thanks, Dale.